War. It's a word that stirs emotions and shakes the world. But what happens when that conflict reaches the financial markets? From stocks and commodities to cryptocurrencies, the effects are immediate and far-reaching. In today's video, we're diving deep into how war news affects the financial markets, including the fast-moving world of crypto. Whether it's stock crashes, commodity price spikes, or the volatility of Bitcoin, we'll break down the ripple effect of global conflicts on your investments. When war news breaks, the markets are often the first to feel it. Stocks, bonds, and even crypto assets react immediately, sometimes even before governments respond. This reaction comes from uncertainty, a key driver in the financial markets. Whether it's the threat of war or an actual outbreak, the news creates a sense of fear and anxiety. In traditional markets, the first thing you'll see is a sell-off in riskier assets. Investors flee from stocks and seek out safe havens like gold or government bonds. Cryptocurrencies, often considered high risk, can also face intense volatility during these times. Bitcoin, for instance, has been both a haven and a highly volatile asset during major geopolitical events. Commodities, on the other hand, often see their prices rise during times of war. When conflict breaks out in regions that are major producers of commodities like oil, wheat, or metals, supply chains are disrupted, driving prices higher. For example, the Russia-Ukraine conflict had a major impact on wheat prices, as both countries are major exporters. Similarly, oil prices spiked when tensions in the Middle East escalated, as investors feared disruptions to the global supply of crude oil. These spikes aren't just market reactions, they have real-world impacts like rising food prices and increased costs for businesses that rely on these resources. Energy markets, especially oil and gas, are some of the most affected by war. Many conflicts occur in regions critical to global energy supply, such as the Middle East or Eastern Europe. When war breaks out in these areas, energy prices tend to spike. During the Gulf War in the early 1990s, oil prices nearly doubled. More recently, the Russia-Ukraine conflict caused natural gas prices to surge, particularly in Europe. Energy costs can have a domino effect on other markets, as businesses face higher production and transportation costs, further contributing to global inflation. Whenever there's uncertainty in the world, investors turn to gold. Often referred to as a safe haven asset, gold has long been the go-to investment during times of geopolitical tension and war. Gold's value tends to rise as investors move away from risky assets like stocks and look for more stable stores of value. In 2022, for example, when the Russia-Ukraine war escalated, gold prices jumped by over 10% as investors sought refuge from the volatility in other markets. By holding gold, investors can hedge against inflation and currency devaluation, both of which are common in war-affected economies. Currency markets also feel the shock of war news. When a country involved in a conflict sees its economy weaken, its currency often devalues. Investors flee from weaker currencies, causing sharp fluctuations in the foreign exchange market. At the same time, inflation tends to rise during wars. With supply chains disrupted and energy costs soaring, the prices of goods and services increase. Central banks may be forced to raise interest rates to combat inflation, which can add another layer of complexity for investors. Currency volatility and inflation make investing during wartime even more challenging, pushing investors towards safer assets like gold or even stable cryptocurrencies. Now let's talk about the crypto market. Cryptocurrencies like Bitcoin have been gaining attention as alternative assets during times of crisis. But how does the crypto market react to war news? Initially, Cryptocurrencies can experience the same volatility as stocks. When the Russia-Ukraine conflict escalated, Bitcoin and other digital assets saw a sharp drop. However, as the conflict continued, crypto became a refuge for some investors, especially in countries experiencing currency devaluation or sanctions. For example, Ukrainians and Russians turned to cryptocurrencies to preserve their wealth and move money across borders. Stablecoins like USDT and USDC also saw increased usage as people sought to protect themselves from the instability of local currencies. However, crypto's volatility can make it both a risky and opportunistic market during wartime. As we've seen, war news impacts financial markets in many ways, from stock market volatility and surging commodity prices to currency fluctuations and crypto's role as a digital refuge. Navigating these turbulent times requires a deep understanding of the market forces at play and a solid investment strategy. If you found this video insightful, don't forget to like, subscribe, and hit the notification bell so you never miss an update on the world of finance and crypto. And as always, stay informed, stay vigilant, and navigate the markets with confidence. See you in the next video.